Hello viewers, welcome to my channel. I'm Hasham. This is the third and last video on theory of capital gain. Last two videos I have explained you the meaning of the term capital gain, long-term, short-term capital gain, nature of capital asset, transfer of capital asset, and advance money forfeited. All these topics I have completed in the last two videos. Now this is the third and final video on theory. Next video onwards we'll start the problems. Now in this third video, I'm going to explain you three important topics. The first topic is what is acquisition cost, cost of acquisition. Secondly, indexed cost of acquisition. And thirdly, special mode of transfer. So these are very important again because these concepts will be applied while doing the problem. In examination, very frequently they will ask you, what do you mean by indexed cost of acquisition? What do you mean by special mode of transfer? So watch the video till the end to get the complete command on this topic of capital gain. Now, first of all, cost of acquisition. Acquisition means purchase. What is the purchase cost? Purchase cost includes all expenses also in order to purchase the goods. So it means total of all expenses incurred by the SSC for acquiring the asset. For purchasing the asset, all the expenditure incurred will be included in cost of acquisition. For example, purchase price and expenses incurred after purchase till its first use. Example, installation charges. Suppose a machine is purchased for 5 lakh. Now, after purchasing the machine for 5 lakh, 1 lakh rupees are incurred on transportation and installation. That means the total cost of the machine will be 5 lakh plus 1 lakh 6 lakh. Similarly, a property is purchased for rupees 80 lakh. And in order to purchase that property, 5 lakh rupees is incurred on registration charges. So we include these registration charges also in the cost of the building. So purchase, cost of acquisition include the purchase price and all incidental expenses relating to purchase. If the cost of the asset cannot be ascertained, the fair market value, commonly known as FMV, will be taken as the cost of acquisition. If the asset is purchased before 1/4/2001, then the SSC can choose higher of the following two as the cost of acquisition. So income tax is lenient on this topic, that if the asset is purchased before 1st April 2001, the SSC can choose higher of the two, that is actual cost or fair market value on 1/4/2001. Example, if the actual cost was 1 lakh and if the fair market value on 1/4/2001 is 5 lakh, if he takes 1 lakh rupees as the cost of acquisition, then his capital gain tax will be more. So if he takes the FMV on 1/4/2001, that is 5 lakh rupees, his tax liability will get lower. So if the asset is purchased before 1/4/2001, then he can choose higher of the two. Then indexed cost of acquisition. Actually, indexed cost of acquisition means inflated cost of acquisition or increased cost of acquisition. Due to inflation, the value of money is coming down. The purchasing power of money in the previous years was much more than the purchasing power of money today because of inflation. Now, to take into account the effect of inflation, Income Tax Act has given some leniency on the SSC, that they can choose indexed cost of acquisition instead of actual cost of acquisition. In indexed cost of acquisition, index numbers will be used to inflate the cost of acquisition. When we inflate the cost of acquisition, then the capital gain will come down. The tax liability will get reduced. But indexed cost of acquisition will be allowed only for long-term capital asset. So indexed cost of acquisition means inflated or increased cost price instead of actual price. The price is justified on account of inflation. Just now I told you, the net result of indexed cost of acquisition is the tax liability will get reduced. This benefit is also permitted for indexed cost of improvement. If any improvement is done, then indexed cost of acquisition, indexed cost of improvement will also be calculated. The benefit of indexation will be allowed only for long-term capital asset, not at all on short-term capital asset. These are the points you have to remember for indexed cost of acquisition. Now I am coming to special mode of transfer. Now actually transfer will take place actually when one person transfers the ownership to another person voluntarily. But sometimes there is a special mode of transfer where when the special mode of transfer will be done, distribution of assets to members at the time of partition of Hindu undivided family. When the Hindu undivided family was closed, all the assets of HUF will be transferred to the owners, members. In that case, it's a special mode of transfer. Gifted property. When some property are gifted by one person to another person, that is also a special mode. Then property is acquired by will. So before the death of a person has written a will that after his death the property will be transferred to so and so person. It's a special mode. Then inherited properties. The properties which come down from linearly descendant to the person. It is called inherited property. Again, distribution of assets on a dissolution of firm or association of persons. Similarly, if the company distribute the assets at the time of liquidation, these cases are called special mode of transfer. So what will happen when special mode of transfer? If the SSC has acquired the asset under special mode of transfer, then the cost of acquisition is the cost to the previous owner. Example, A gifted the property to B. So B has not paid anything. B got the property freely as a gift. Then if B transfers the asset, the cost of acquisition is the cost to the previous owner A. Now before starting the explanation about the cost of acquisition, take the screenshot of the points. Then I'll explain. Now, first of all, in order to calculate the capital gain, we must know what do you mean by cost of acquisition. From the consideration received, cost of acquisition will be deducted to get the capital gain. So what is the meaning of the term cost of acquisition? The cost of acquisition means the total of all the expenses incurred by the SSC for acquiring the asset. That is purchase price and expenses incurred after the purchase till its first use. Example, installation charges. Simple words I can say like this. Cost of acquisition means the expenditure incurred on purchasing the asset and also all incidental expenses in order to purchase the asset, like installation of the asset. So this is called cost of acquisition. If the cost of the asset cannot be ascertained for some valid reason, the fair market value is taken as the cost of acquisition as per the provisions of the Income Tax Act. So according to the income tax rules, first of all, we have to calculate the cost of acquisition. But sometimes the SSC cannot be able to correctly calculate the cost of acquisition. In that case, income tax rule says whatever is the fair market value at the time of purchasing the asset, that fair market value will be considered as cost of acquisition. Then if the asset is purchased before 1/4/2001, then the cost of acquisition is higher of the following to actual cost or fair market value on 1/4/2001. Suppose if the asset was acquired by the SSC before 1st April 2001. In that case, income tax rule says the SSC can choose the higher of the following two. Actual cost of the asset or fair market value on 1/4/2001, whichever is higher. Example, if a person has purchased a building for rupees 1 lakh in the year 1998, that means before 2001. So before 2001, he has purchased for 1 lakh. On 1/4/2001, the value of the building was 5 lakh. So income tax rule says the SSC can choose higher of the following two. Actual cost of acquisition 1 lakh or the fair market value on 1/4/2001 5 lakh. Whichever is higher, that can be chosen. What will happen if we choose higher value? His tax liability will get decreased, reduced. So every SSC wants to reduce the tax liability. That's why he will choose the higher actual cost or fair market value. The benefit is not allowed for depreciable asset. In the previous video I told you, Income Tax Act says if a depreciable asset which is used in the business is sold, for any period of holding, it is always treated as short-term capital gain. Short-term capital gain. Then this rule will not apply. Actual cost or fair market value, whichever is higher, that rule will not apply to depreciable asset. Next comes cost of acquisition, stamp duty. In the coming problems, we come across a problem where the stamp duty will also be given. So we have to compare the fair market value with the stamp duty value. So if in case of land and building or both, if stamp duty value is available, then fair market value of such land and building or both on 1/4/2001 shall not exceed the stamp duty value on 1/4/2001. So the fair market value should not exceed the stamp duty value. So whichever is lower, that should be taken. That means the fair market value or stamp duty value, whichever. If in the problem stamp duty value is given. Next comes indexed cost of acquisition. Very important for theory purpose also, apart from problems. In examination, theory will be asked, what do you mean by indexed cost of acquisition? Indexed cost of acquisition means inflated cost of acquisition or increased cost of acquisition. Income Tax Act says the value of money is not remaining same. The value of money is changing, particularly due to inflation. The general price level is increasing. In that case, it will be a heavy burden on the part of the SSC to pay huge tax, because at the time of selling the property, he is getting more money, whereas he has purchased the property very long back when the value of money was more. Now the value of money is less. So we cannot compare the value of money 25 years back and the value of money today. Today's value of money is different from the value of money 25 years back. So how we can be able to compare? In that case, Income Tax Act has given the provision that for calculating long-term capital gain, we can calculate indexed cost of acquisition. The actual cost of acquisition will be increased on account of inflation. The price is justified on account of inflation. The net result of cost of acquisition is reducing the tax liability. What will happen if we take indexed cost of acquisition? When we calculate indexed cost of acquisition, the cost of acquisition value will increase. When the cost of acquisition value increases, the capital gain will decrease. When capital gain decreases, the tax liability will also decrease. That is the net effect of indexed cost of acquisition. The increase in the cost of acquisition is called indexed cost of acquisition. This benefit is also permitted for cost of improvement. Improvement means when additions are made to the capital asset. For example, I have purchased a building which is a two-storied building. Later on, after purchasing the two-storied building, I have added one more floor or some more rooms. In that case, it is called improvement. So indexing will be done to the cost of acquisition and also to the cost of improvement. The benefit of indexation is allowed only for long term. Very important point. This indexed cost of acquisition benefit will be given only for long term capital asset. That means for calculating LTCG, then only we can apply indexed cost. The cost of acquisition and cost of improvement of the asset will be linked to the cost of inflation index, which is notified by the central government. So here in India, the government of India will notify what is the indexed cost of inflation. That index number we need not calculate, the government will publish. So we have to take the indexed inflation rate of the government. Now, LTCG, how to calculate long-term capital gain? Consideration received or sale price. Both means same. We can call it as consideration received or we can call it as sale price. From that, deduct the transfer expenses. If any selling expenses are incurred, deduct it from consideration. We will get the net consideration. From net consideration, deduct two items: indexed cost of acquisition and indexed cost of improvement. Then we'll get capital gain, LTCG. That's it. Now the index factors are made applicable only from 1/4/2001. See here. These index numbers are notified by the government only from 1st April 2001. So before 1st April 2001, we don't have any index numbers. So if an asset is purchased before 1/4/2001, we have to take the index number of purchase year as 100. Because we don't have. We have the index number only from 1st April 2001. So any asset purchased before 1/4/2001, we take the index number 100. So after 1/4/2001, every year index number are specified by government. So if an asset is acquired before 1/4/2001, index number of the purchase year will be taken as 100. Now, cost of improvement. If any additions or improvements are made on the capital asset, that is called cost of improvement. Like adding some more rooms to the building, adding one more floor to the building, that is called cost of improvement. So cost of improvement will also be indexed. So if expenses are incurred before 1/4/2001, before 1st April 2001, any improvement are made, that improvement should be ignored. Index number for current previous year. See here, our current assessment year is 22-23. The previous year is 21-22. So you have to remember the current previous year index number. The current previous year index number for 2021-22 is 370. This you have to remember. Sometimes it will be given in the problem in examination, sometimes it may not be given. So current year you should remember 317 is the index number, right? Now, index number of the year of 2001-2002. In the year 2001-2002, the index number was 100. Before 2001-2002, we don't have index number. So these 2 years index you have to remember. 2001-2002 it is 100 and 2021-22 it is 317. Remaining years all index number need not to be remembered because in the problem it will be given, right? Now the formula for indexed cost of acquisition is actual cost of acquisition into previous year index divided by index number of the purchase year. This formula we are going to apply in the coming problems to calculate the indexed cost of acquisition. So actual cost into previous year index. The previous year index is 317. 317 will be in the numerator. Denominator, the index number of the purchase year. That's it. Now short-term capital gain. There is no indexing for short-term capital gain. Directly we calculate STCG, sale price minus transfer expenses minus purchase price or book value or written down value. That's it. So this is the short-term capital gain. For short-term capital assets, indexed cost of acquisition should not be calculated. This indexed cost of acquisition is confined only for LTCG. For short-term capital gain, no indexing. Similarly, for depreciable assets, if a depreciable asset is used in the business, then always the gain arising will be short-term capital gain irrespective of the period of holding. In that case, no need to calculate indexed cost of acquisition. Thirdly, for all long-term capital assets except debentures and bonds, indexed cost of acquisition and indexed cost of improvement are to be calculated. Except the bonds and debentures, we should not make indexing. Apart from debentures and bonds, all long-term assets should be indexed. Now, assets acquired under special mode of transfer. This is also important for your theory purpose. Sometimes an SSC will get to the asset by a special mode of transfer. Example, if the SSC has acquired any asset under special mode of transfer as given below, then the cost of acquisition will be the cost to the previous owner. If Mr. X got the property through gift from his father, the father has purchased the property. After keeping the property for a long period, the father has transferred or gifted the house property to the son. The son got the property through gift. That means he has not paid anything. There is no cost of purchase. Income Tax Act says the son got the property through gift. So whatever is the cost to the previous owner will be the cost to the SSC. Income Tax Act there says the son has to pay the tax by calculating cost of acquisition to the father. At what price father has purchased, that is the cost of acquisition to the son. Then what is the special mode of transfer? Dissolution of assets to the members in the HUF. Hindu undivided family, when it is dissolved, When it is dissolved, all the assets will be distributed among the members. The members are getting freely. All the assets the members are getting freely from the HUF. So Income Tax Act says whatever is the value to the HUF, that will be the value to the SSC. Then gifted properties, just now I have given the example. Gifted property, the value to the previous owner, the cost to the previous owner is the cost to the SSC. Then properties acquired out of will. Sometimes a person through will, he transfer the property to another person. So the person who is getting the property through will, the cost of acquisition will be the cost of the previous owner. Next one, inherited property. Properties will be inherited from the father to son, from the son to grandson. Like that, it will be inherited. So in inherited property also, the cost to the previous owner is the cost to the SSC. The distribution of assets on dissolution of the firm or association of persons. If a firm or association of person is dissolved, then all the assets will be distributed among the partners, among the members. Then the cost to the firm will be the cost to the member. These are called, one more point is there. If the company distributed the assets on its liquidation, if the company is dissolved and the assets are distributed among the members, then the cost of acquisition to the member is the cost to the company. That's all. These are called assets which are obtained by special mode of transfer. Last item is format of computing the income from capital gain for the assessment year. In the coming problems, what format we are going to follow in order to compute the capital gain? So, two columns I have opened. First, consideration received. From consideration received, less transfer expenses. Then we get net consideration. Then less indexed cost of acquisition, indexed cost of improvement. The total we are taking in the outer column. Then deduct, will get capital gain. From capital gain, some exemptions are given under section 54. If in the problem exemptions are there, then it will be allowed. If no exemptions are there, then capital gain here itself our problem will be finished. So exemptions will be given. After that, we'll get long-term capital gain. That's all. So in these 3 videos, I have explained you about the income from capital gain. Inshallah, in the next video, we'll start the problems on capital gain. So give a like to the video, share my channel, give your comments, and buy the super thanks which is given below my video. Inshallah, we'll start the problem in the next video.